Well, let's look at more business and finance news. We're joined by Suzanne Haddan, Managing Director of BFG Financial Services. Suzanne, welcome.
Good morning.
Let's just take a look at where we are as far as stock market is concerned. Certainly in the States, it has been a bull run, hasn't it? Certainly since Donald Trump has entered the White House. There are concerns, though, it's a little overdone.
Well, they're at record territory, and you're absolutely right. The Trump factor has played into it. But there's a lot of concerns with what the Fed might do with interest rates, and has it been too heated? So now is the time to be reviewing where you're sitting with your financial affairs to protect yourself from downside. I mean, this last financial year, including dividends, you would have, or the last 12 months, you would have earned over 28% from the US stock market, which clearly on anyone's measure is a huge return.
It is a huge return. Of course, the risk though then is what happens when the tide changes.
And that's the billion-dollar question, isn't it? So in the Australian market, we're at 9.5-year highs ourselves and earning over 20%, including dividends. So I get concerned that are we pricing risk correctly in our portfolios? And what I mean by that is understanding what you're invested in and what could happen, not if, but when we have a correction. It's a bit like baby teething. It will happen, so you need to be prepared for it. So have a look at how you've set up your assets. Are your exposures appropriate for your circumstances? Think about a retiree. What are they going to do if the share market crashes again like the GFC if they haven't protected themselves with some low-risk assets to meet their living expenses? That's just one concern.
Do you feel as though the Australian market is as vulnerable as Wall Street? You say that, locally, 9.5-year highs, that's sort of pre-GFC levels. But clearly the local performance has not been as great as those from offshore.
That's correct, but markets falling is like a group activity. So one in, all in, is just a question of degrees. So we don't think the Australian market is highly vulnerable. But I would point out that in market corrections, debt always plays a part. Think of GFC. What was the major catalyst for that? It was subprime loans, which is debt. What's our position now? How highly leveraged are we? How much are people borrowing to invest in shares or other assets? So I'd be keeping a close eye on debt and interest rates.
Well, speaking of which,
because I think we do have some record levels of household debt in Australia currently, and of course a big investment factor would be housing.
Yes.
What's shifted, do you think, in the market recently when it's coming to first home buyers with the superannuation changes we've had?
Well, what I find exciting, and as I said, I hope you find exciting too, is the new First Home Super Saver scheme. It's a tax minimisation that's legal. And what it is, it hasn't passed both houses of parliament, so let's not get too excited yet. But basically what it means is you're able to contribute money into superannuation and also on a pre-tax basis, and then withdraw it at a later stage to help you with a home deposit. Lots of rules around it. You've got to be over 18, first home buyer. But as far as what does it means that in a few years, instead of having, say, $23,000 for your deposit, you could have $30,000 through tax incentives. And that coupled, that's a 30% increase on your deposit savings. That coupled with buying with someone else, there's $60,000, and maybe some of the first home buyer incentives around the state could add another up to $34,000 to your deposit. So you're shifting quite dramatically, and it's exciting.
Suzanne, more broadly, we look at loan approvals, they're actually falling. Why is that?
Well, APRA have tightened the reins on borrowing. So you have investment loans, down about 6% last month, home loans down a couple of percent. But what's exciting is first home buyers at 17% of the home loan applicants is the highest point for 4 years. Exciting in one way, concerning in another, depending on what state you're borrowing, because you don't want to be buying your first home at the peak of the market. But Australia isn't homogenous. It's different states have performed differently. So look at your state, look at where you're buying, try to avoid buying at the peak of the market. Maybe using the First Home Savers incentive scheme would be a better option for you.
Now, you use the term there, tax minimisation. We've had also the Paradise Papers revelations the past week, and all those issues around tax avoidance, particularly looking at wealthy individuals and corporations that are able to move money offshore. Do you feel that that might create a little bit of momentum around the issue of tax reform and how to bring that money back into the country?
I think that's an important point. Tax minimisation, which is the legal element of it, the ATO believes there are some wealthy Australians and corporates who are using these havens legitimately, but does that meet community expectations? And if it doesn't, then the tax laws need to be reviewed and the accounting standards need to be reviewed. As far as the tax evaders, the ATO has advised they will be pursuing those aggressively, and I could just imagine the excitement in the ATO, who said tax and accounting wasn't exciting, with having access to all that information and transparency. You've got to ask yourself the question, if you are confident in what you're doing, why are you using jurisdictions that have secrecy? And look at the revenue we lose through this. The ATO for the 2015 financial year said it was $2.5 billion. Can I also say, though, as an accountant, I have never had a client walk in and say, Suzanne, could you structure my affairs to make sure I pay more tax than I'm legally obliged to?
Yeah.
Or how about my fair share? Suzanne Haddan, thanks so much.
My pleasure.
Thank you.